Welcome back, my passive income investors alike, to the continued sell-off in some of my favorite stocks that I decided to pick up today, folks. We're going to be talking about Bitcoin, Momentous, my space company, and two dividend stocks that I haven't purchased yet that are on my buy list that, oh my goodness, are looking very juicy. And you might be asking yourself, Kyle, how are you coming up with all the money to pay for this stuff? And I really don't know, guys. I've been leveraging my line of credit. I actually have money that should be going toward taxes for next year that I'm like, you know what? Maybe I'll invest some of this because I got the rest of the year to come up with that tax money. And no, you shouldn't be taking this as financial advice. I'm some kid that lives in his parents' basement, so don't buy anything I'm buying here, guys. I'm just documenting my own financial independence, retire early journey, and I would appreciate it if you'd hit that like button. Consider subscribing, folks, and let's zoom out by starting with the Bitcoin. This is something that I don't particularly am fond of talking about, but my frustrations are beyond me at this point because it is not easy for a Canadian to buy Bitcoin. And oh my God, I've learned I'm not a fan of Coinbase. I likely will not be buying the IPO at this point, or at least I'm on the cusp of the edge, because I've come to realize that these platforms are more inclined for US citizens. They're not really serving the Bitcoin purpose that I would have thought. But don't worry, I'm being critical here. So look, as a Canadian, you are limited to how you can buy Bitcoin on all of these platforms that are primarily US related. You have to give them all of your identification. And once you get through those hoops and hurdles, you end up at a screen where they ask you to deposit capital here to buy your Bitcoin. Now, unfortunately, being a Canadian, I can't do a wire transfer. So the only thing they let you do is debit and Visa card. After putting in my first Visa card that got rejected, I'm like, heck, let me try my line of credit card. I top up my line of credit. Let's go buy $500 or something worth of Bitcoin here. And oh, wait, you can only buy, there's a limit, $300 with my line of credit. I was like, what the hell is this? And they charge you like a huge fee, a pretty taxed on fee to buy that. And they're like, hey, you can only spend $300 a day. I'm like, what the hell is this? And then I go to make the purchase just to see how it would go, and it gets rejected. They claim that my account has suspicious activity on it, and they declined my purchase. So here I sit, extremely frustrated with Coinbase. I sent them an email with no prevail. I have this account all set up, and I got no way of funding it. Can't access, I can't. And then you set up PayPal, and you think they'd accept PayPal? No, you can only withdraw the PayPal. You can't make deposits. So my feelings around Coinbase have changed drastically since I've tried it out. Very unappealed, okay, being a Canadian anyways. So let's talk about me continuing down this path of Bitcoin. I'm like, you know what? Let's go to Wealthsimple. What can Wealthsimple do for me? They say you can buy Bitcoin here, but wait, you can't actually buy Bitcoin per se. I deposited $250. I'm waiting for it to get approved here, and then I'm actually just going to try buying it to see what it's like, because essentially Bitcoin on Wealthsimple is a big pool, because Wealthsimple's like, hey, we're just gonna go buy a bunch of Bitcoin and you can buy into it and you'll actually own your percentage, but you can't actually own it. You can't take it. You can't buy a Tesla with it. You can't put it on a little chip in your pocket. You can't move it around. It's literally locked in a Wealthsimple account, from my understanding, and you're just allowed to trade it. Anyways, this is as close as I've come to being able to buy Bitcoin since I've been talking about it in the last 3 days. And I'm not doing this to make any major investments. I'm not doing this to say buy Bitcoin. I'm not saying I hate Bitcoin. I'm just trying to get my fingers into the industry so I know exactly what people are talking about when I'm arguing about this, because I feel kind of ignorant, if I'm being honest. So nonetheless, guys, Wealthsimple seems to be the easiest path to me getting a Bitcoin I don't technically have in my hand, but it is what it is. So if that wasn't good enough for me, I want to be able to use Bitcoin in my own means. I want full control over it. So I'm trying out crypto.com, another account that actually came widely recommended by a lot of you. I've had people personally reach out to me and talk about this one. So I'm going to attempt to try crypto.com. I've looked at videos. Their platform seems way more usable. And again, these platforms are actually relatively protected and safe. I mean, they have insurance hedges and special accounts to protect the crypto assets. Like, I mean, it's pretty intense stuff. They're all like Coinbase. Coinbase, I'm starting to realize, is nothing special here, guys. And to be honest, for their valuation of being around $100 billion, more than my bank is worth, I don't know how much I believe in that, guys, because it doesn't seem to be serving the true purpose of the business. I feel like they're more worried about scams, and they're overprotecting it to the point where people like me can't buy Bitcoin and there's no customer service. So here I am already moving on to a different platform because they have issues. So they're losing money because of that. Anyways, crypto.com is going to be a very similar fashion of this. I'm also having issues here because the identification process is it's a hoops and hurdles to get through here, guys. So anyways, I'll let you guys know when I get into crypto.com. I'll let you know my experience with this, and I'm just going to mess around with it and just see what this whole platform is about, just for my own learning experience, not advising anyone to go buy Bitcoin. But what I'm realizing about Bitcoin is there is a reason that the wealthy own it. I really feel like Bitcoin will never serve the purpose that was initially intended, which was to be a liquid currency in countries like Venezuela or anywhere the currencies they use are kind of volatile and unreliable. But at the same time, when it is this friggin' hard to access it and I have to do it through a financial institution, like it just completely defeats the purpose of the liquidity of it, right? So like I said, guys, there's always this gray area. I hate pumpers. I hate them. Like every Bitcoin I meet is a fanatic that can never argue both sides. I always try and look for the worst in all of my investments because then I know what could potentially happen. I don't look for just the moon shoots here, right? That's why I always tell you guys, like when I was buying MindMed, that there's a better chance it goes to zero every time I pretty much talk about it. But nonetheless, let's put that aside, guys. This is where I sit today. I'll come back. I'll tell you my experiences, but let's move on to the next stock here that is getting me very excited. I'm talking about Table Roadhouse Acquisition Corp. Oh my God, I bought some today, guys. I bought it for a little more. I should have waited a little longer. It's trading down from where I bought it. But yes, my space industry pick, all the SPACs, a lot of SPAC stocks are selling off right now, including Tesla, which is a good buying opportunity because, as I told you guys in the past, that when you're looking for opportunities in the market, it's always great when news or just random events like this happen, but there's no news reflecting the sell-off. And when we see something like a 30% correction in Momentous here, I'm like, you know what? It's my spec play. I'll buy a little bit more. This is my space bet, baby. And I'll go ahead and show you guys how much I bought because I did pick up, I think 25 shares today. Nothing major, but just because this one position's down 32%, I was like, damn it, I'm taking advantage of this because I just believe in this company, guys. It's high risk, high reward. Luckily for me, I didn't buy this with anything other than my MindMed profits, which I'm still doing great on my MindMed position here, guys. So anyways, don't buy these, guys. They're risky. There's a reason that they drop 30%. My risk tolerance is adjusted for this. I'm a little more comfortable than most people might, but it's pretty hard to feel uncomfortable when your Ryokan stock is going to the moon and it pays a healthy dividend and you only bought enough SRAC that if it's down 30%, it's like $2 or $3 grand, not a big deal. Not a big deal in my world. So make sure you understand your risk tolerance here, folks. But let's talk about safer companies. Heck, I am also a dabbler into the endless dividend stocks that are going to take me to my financial freedom because at the end of the day, I'm only buying stable road to one day buy something like a stable Ryokan. So nonetheless here, folks, well, Ryokan, a little more rocky this year. But let's talk about the two picks I'm looking at. I've mentioned these in the past. Hydro One, which is a ginormous transmission utility here in Ontario. Unlike my Northland Power, which I talked about the other day, dipping pretty heavily, good buying opportunity as well. Northland Power to me is a renewable utility. I also own Southern Company, which deals with like nuclear and a ton of other utilities in the States, one of the largest utilities in the States. And then I want to buy this because it's not really about power generation as much as it is with power transmission. They own all the hydro lines throughout Ontario pretty much, and it's trading down 11%. This is not an attractive growth stock. It pays a 3.8% dividend yield right here. And if we go into their books, and you just take a look at their assets minus their liabilities here, they're sitting on about $10 billion minusing their liabilities, guys, which is pretty close to their value. I mean, it's 30% off from their actual underlying asset value. It trades at a PE of 9. And yeah, it's not growing like a monster. They just started picking up steam here in 2020. If we take a look at the quarterly, they're actually picking back up, which is why the stock has been rallying so well. But guys, it's a boring company. It's going to be a retirement stock. It's not going to be going anywhere, guys. And just taking a look at the dividend, the reason we're buying it, it does increase relatively year over year here. Again, nothing fast, nothing crazy, but you're starting at an incredible yield, right? So just to get any growth, to get some stability in your portfolio, these are the kind of companies I turn to. Now, I'm leaning in the direction of one of these two because I also own absolutely no telecommunication stocks. And TELUS, I feel like flies under the radar. A lot of people talk about Rogers, which is trading down, and AT&T, but TELUS, against all of those, has actually been a much better performer. Now, it is only trading down 5%, but I mean, look at the stability in the upwards of this chart. Now, don't get me wrong. I think TELUS is starting to burn out a little bit in what their future potential growth will look like against what we've experienced in the past, but we're not buying these particularly just for stock growth. We're buying it for this dividend yield that starts at 4.8%. The PE is astronomically higher compared to, say, something like a Hydro One, which is kind of funny because when you go into their assets and you minus the 43 billion they have against the 30, they really only have $13 billion in underlying assets. So you're paying a hefty premium against their underlying market capitalization. So we can see Hydro One, you're getting a little bit better of a discount and a better valuation, a little lower of a yield with not as much growth probably moving forward. But TELUS, you might get a little more growth, higher starting yield, but you're paying a much heftier premium for that value, guys. And these are some of the confusing things that come into buying stocks, I know. But nonetheless, let's just take a look at the dividend. We get much more of an increase here. So when you can see how TELUS is more of a growth stock than something like a Hydro One, just on every level, but they both can fit in your portfolio for very particular reasons. And I want to pass the question off to you Canadians out there. Of these two companies, do you like Hydro One more, or would you buy TELUS, or would you buy both? I got some capital sitting around, and I am probably going to dump maybe $1,000 or $2,000 into one of these. I want to do it today, but I'm just being cautious because the markets are in a continued sell-off, and I just bought SRAC for like $18.50, and we can see it's hovering around 18. And if this thing drops to 15, I'm going to be rather disappointed, but that's the risk that I know I'm taking on. So in light of all this, I pass the question off to you. Let me know what you guys think in that comment section below, but stay cool, stay awesome. I look forward to catching you tomorrow.